Also getting some breaking news on the AI front. Mackenzie Sagales has the story from San Francisco. Mackenzie.
Hey, Sarah. So Anthropic is adding another $50 billion to its AI compute bill, announcing a new build-out of data centers across the U.S., starting in Texas and New York. Now, they're partnering with FluidStack. That's an AI cloud platform behind GPU clusters for Meta, Midjourney, and Mistral. They are known for building custom facilities that can deliver gigawatts of power on short timelines. Those first sites are set to come online in 2026, and it adds to an $11 billion campus that Amazon just built for Anthropic in Indiana, and a new expansion with Google Cloud worth tens of billions of dollars. This is really the clearest sign yet that Anthropic wants to control the physical backbone of AI, not just build the models that run on top of it. The project, it is expected to create more than 3,000 jobs, but the big question is how they are paying for it. Anthropic hasn't said whether debt financing is lined up or if they're dipping into that $13 billion cash pool that they raised in September. And even with their sharper focus on enterprise clients, definitively the more profitable side of AI, they're still not generating enough cash to fund projects of this size. And it comes as tensions are rising between Washington and the AI sector after OpenAI CFO Sarah Friar floated, then walked back the idea of a federal backstop for that company's trillion-dollar-plus infrastructure spend, as well as OpenAI's letter to D.C. asking to expand CHIPS Act credits to help offset compute costs. Guys?
That's the question. How's it going to get paid for? I mean, there's a lot of debt financing going on. Mackenzie, is that the assumption? I remember that there's also talk that Anthropic is closer to profitability and than, for instance, OpenAI. So maybe investors shouldn't be as worried about that one.
Yeah, the Wall Street Journal got access to internal documents from both OpenAI and Anthropic that showed that Anthropic was set to turn a profit in 2028, so in 2 years from now, while OpenAI was going to burn $74 billion that year. But to your point, all of these data center build-outs so far have been structured through debt. You've got Meta structuring its $27 billion build in Louisiana through a joint venture with Blue Owl Capital. Oracle's doing its $38 billion debt package, and then xAI is actually structuring this through a special purpose vehicle where NVIDIA GPUs are being used as collateral and that debt package. So people are really getting creative here. But, I mean, the larger question is whether investors are convinced that it's going to pay off, because right now you've got this AI debt boom showing real signs of strain. Oracle's credit default swaps, they have spiked in the last week as investors hedge against all this aggressive borrowing.
Something to watch. Mackenzie, thank you. Mackenzie Sagales on another $50 billion, just another day, investment in data centers.